Thanks, Jackie, and thank you to our entire accounting team. Understanding the back office capabilities and understanding how we scale platforms is so critical to how we build great and sustainable businesses. In getting to that point and building great and sustainable businesses, the most important thing that we have to make as asset allocators is the decision to ultimately whether we buy or build. And this to us is really one of the great differentiators at DigitalBridge today, is we have that capability to build great companies through acquisitions or through greenfield. Joined by my partner, Ben Jenkins. And Ben, thought we'd just talk a little bit about the framework and how we make those decisions, and ultimately thinking through the last decade where we've been in investment committee together, thinking through those decisions, whether we buy or build. And I thought this would be a great forum to talk a little bit about that between the two of us.
Sure, and thank you. The framework is the same, really, whether it's a buy or build decision, the same underwriting. We've talked about the four corners and the key elements in our process. It ultimately then becomes a relative value question. When we see M&A multiples creeping up to well beyond replacement cost, then the economics of new builds become more attractive. But you still need the same elements that we look for in every deal, which is asset quality, customer quality, and of course, the management teams.
When we're sitting in those investment committees, you and I debate this all the time. We've been debating it for the 20 plus years we've known each other. But when we think about those four corners of underwriting, drilling a little bit deeper down, talk about location, asset quality a little bit.
Sure. So because this is physical infrastructure, the location does matter. But it's not in the traditional main-on-main real estate sense, but rather how close it is to the relevant customers, what the fiber connectivity is, what the power supply is, and most importantly, how protected it is. How defensible is that location?
Yeah, the strategic mode is so important, and ultimately being able to get those permits and close the zoning door behind you is something we've always talked about. Having an indelible location ultimately accrues to the benefit of our customers, which is a really good next topic just around counterparty credit risk.
Sure. So, that lease is the primary nexus of our business. So a long-term lease with the likes of Amazon or Microsoft is very different from a short-term lease with a small or medium-sized enterprise. So obviously, the credit quality and tenor of those contracts matters a lot.
Yeah, and that gets us to another point, which is the quality in that credit look-through ultimately defines our capital structure and how we access the institutional debt market.
Yes, that's what primarily the rating agencies and ultimately bond investors are looking at, the underlying credit quality of those customers and the duration of those contracts.
So last two quadrants in ultimately defining that framework is market dynamics and people and platforms. Maybe start for a second a little bit on people and platforms.
Sure. I mean, that's really most critical because without the management teams, none of this happens. And so we would underwrite them the same way, whether it's a buy or build decision, looking for experience, the ability to scale, and ultimately deliver value.
And then last but not least, just the dynamics of the marketplace today. What's that debate that we have internally? It's all encompassing. It involves not just the dynamics of the growth, but we think a little bit bigger from a geopolitical perspective, currency, politics. Yeah. Walk us through that a little bit.
Sure. So, I mean, you start with kind of basic supply-demand analysis, right? And whether we think there's going to be opportunity for the new infrastructure that we're buying or building. And then, you would lay things like currency, macro risks on top of that, and then sort of competitive strategy. What else is in the market or could come into the market that might affect the asset we're considering?
So that's the key there, right? And we think about those four corners, and that ultimately frames the dialogue around buying versus building. And the key at DigitalBridge today is we're super comfortable doing both. and that is a capability that we have internally. And as I think about opportunities around the world today and where we're investing capital, in that debate that we get to have every week in investment committee, maybe just a trip around the world as you and I see it for a couple of minutes for the benefit of the folks watching today. Why don't we start here in North America for a second, and I'll give the vertical, and let's talk a little bit about whether we're buying or we're builders. Sure. Or maybe we're neither. Some of these situations are actually holds for us right now. But starting in a pretty easy asset class for investors to get their minds around, hyperscale data centers here in North America. Are you a buyer or are you a builder?
We're builders today with where M&A multiples are in the sector and our expertise and the proven operators we have at Vantage. That's a real competitive advantage for us. So we would be looking to build at essentially par compared to paying 3 or 4 times replacement cost in the M&A market.
And then we take that into sort of edge and enterprise co-location. I would say we're probably doing both today. Yeah. We're buying and we're building at the same time.
Yeah, I'd say on enterprise, probably more buying than building, just given the availability of assets there. Edge is more of an emerging opportunity, and therefore either building or reconfiguring is really the strategy there.
Pivot a little bit into fiber infrastructure and small cells for a second here in North America. Starting out with fiber today, where are we as a firm in terms of buy and build?
Well, again, I think we're more on the build side through Zayo. Again, very experienced operator with strong technical capability. They can build much cheaper than where M&A multiples are today. Mm-hmm. But we would look opportunistically in certain markets where we might be able to complement our footprint. And small cells, again, is more of a build strategy. With Extenet and now Boingo, those are great platforms to leverage. There aren't a lot of independent small cell companies to buy either, so that does tend to be more building.
Let's go down south. You and I have been investing in building companies since the late 90s in Latin America. We love the region. We've been able to, most importantly, not only invest in the region, but we've been able to exit in the region. Hablamos un poquito de este tema for a second, but just towers in Latin America. How do you feel about that today in terms of buy versus build?
Again, probably a little bit of both. More building today between our platforms in Mexico and South America. We're doing a lot of building, but we would opportunistically consider acquisitions too.
And you've spent a lot of time personally in the fiber sector in Latin America over the last 2 quarters looking at a couple of opportunities. And how do you feel and where's your conviction around fiber in Latin America?
There, I think there is a build opportunity. There's fiber to the home as well as the enterprise and dark fiber routes that are less developed. And so there's good opportunity there. Ideally, with an existing platform, I think doing it truly de novo is hard, but there are ways to play it, whether that's through MTP or ATP or maybe a new platform that we could leverage.
And so in thinking about leveraging platforms, down in Latin America, we've actually used our tower companies to build small cell infrastructure. Yes. And that was really born out of the fact that we couldn't find anything to buy. There really isn't any small cell infrastructure to acquire. So we've naturally pivoted to building. And we're building small cell infrastructure in Brazil, Chile, Colombia, and Mexico today. So really like the build strategy in small cells. Pivoting to data centers in Latin America real quick. Hyperscale versus edge and sort of traditional enterprise colo. What do you like better?
Yeah, again, I think on the hyperscale side, it's most likely new development. Again, the market there is not as evolved, and there's new opportunities, new requirements that we're able to take advantage of through our Scala platform. I think on the enterprise side, it's a little more of a mixed bag. There are existing assets that can be acquired or repurposed, but there will be new build opportunities in that space too.
Let's move on to Europe. We've now been in Europe. You and I have been investing and operating in Europe for over 2 decades. Today in Europe, the tower business is front and center. We just made a big investment in a quote unquote a buy strategy in investing in Vantage Towers. But looking across Europe today, how do you feel going forward in terms of buy versus build?
I think there will be select opportunities to buy more tuck-in type acquisitions, but the bulk of the growth will be from new builds. And having platforms like Vantage, like Digita, is important in order to be able to take advantage of that.
And in terms of red light, green light, small cell infrastructure in Europe today, do you see that as an emerging asset class over the next decade, like it's emerged here in the U.S.?
I do, and Freshwave is experiencing that in the UK, and I think certain markets on the continent will follow. So that's something we definitely have our eye on.
And as a logical progression, that fiber, what are your thoughts around fiber to Europe? Very competitive, a lot happening, a lot of big partnerships with carriers trying to build dark fiber. What's your perspective on it?
Well, I think it is a fairly crowded space today, and absent some dislocation that honestly we don't foresee, I think that would be hard to find as a new entry point. But again, leveraging existing platforms like Freshwave, like the substantial business Zayo has in Europe, that's a way that we can still play that market.
You talked about in hyperscale data centers, the comparative advantage in Latin America as being our capability to build, same here in North America. I think we've demonstrated that at Vantage Europe. All of you got to hear from Cyril Chasky, who is our great CEO there. Talk about Europe hyperscale data centers and what do you like about it right now between buy and build?
Sure, well, and we're doing both, clearly. There's some very interesting dynamics at play, including this whole notion of data sovereignty, where the EU has said that data regarding its citizens needs to be housed in Europe, and then individual countries have gone even further and said, their citizens' data needs to be held within the country. So that's spurring significant growth in hyperscale data centers, many of which are being built de novo, and Vantage is at the forefront of that.
It's interesting, on the enterprise side, we looked at a lot of opportunities over the last 5 or 6 years, couldn't get there. Ultimately, we passed on buying, really hard to build enterprise colo. And so as you think about what we're doing going forward in edge computing and in enterprise colocation, where are you in terms of buy versus build on traditional data centers in Europe now?
Yeah, well, I think the recently announced Atlas Edge partnership is a great example of taking that experience and acting on it in a different way, right? We were looking at various data centers and couldn't get there mainly on price, and then sort of changing the frame to more of the edge and thinking about what existing assets might be repurposed to take advantage of that, I think is a great strategy, and there's lots of opportunity around that.
You've almost just created a third vertical, right? There's buy, there's build, and then there's repurpose. And I agree with you. It's a great opportunity. Last frontier is Asia. We've just entered that market in the last couple of years. It's a market that's not foreign to you. You were the first boots on the ground for Blackstone, opening up their operations there in Asia. Justin Chang is running Asia for us, who all of you have heard from today. Why don't we walk through a couple of those verticals and what insights you see over there? Maybe the easiest place to start is always towers in our DNA. Where are you today, buy versus build?
Yeah, look, I think, again, it's both. Maybe buy, then build. We have our EdgePoint platform, which is growing very rapidly, doing both M&A and new build, and I think that will continue. We're looking, of course, at other markets, and there's much growth still to come between the final rollout of 4G and eventually 5G. So there's going to need to be significantly more towers across Asia, and EdgePoint and potentially other platforms can take advantage of that.
You know, EdgePoint is also doing small cell infrastructure and building cloud radio access network hubs in the countries that they operate. I also think Japan is one of those really interesting marketplaces for virtualized, radio access networks. You think about what Rakuten is doing and what SoftBank has done. That could be a really interesting opportunity as well. Maybe a buy and build strategy where we're helping virtualize that core of the network. So I think we keep our eye on that. That'll be pretty exciting. So towers, small cells, moving into data centers in terms of Asia, looking at that bifurcation between, retail enterprise, colo and edge, and hyperscale. How do you see it unfolding for us over the next year in those two verticals?
Yeah. So clearly, we are making a push on the hyperscale side through our Agile platform, and I think there's opportunity clearly in Japan, Korea, Taiwan, Hong Kong, even down to Singapore and Australia. So I see us being very active there on the hyperscale side.
Yeah, all the web scalers tell us that the one marketplace around the globe where they need the most help and where they're going to turn up the most power compute is going to be in Asia. So that's a huge opportunity for us. Fiber, last vertical, last geography. What are your thoughts on dark and enterprise fiber in Asia?
Yeah, I think that's somewhat more challenging given the market structures there. There tend to be significant national companies, many of them already very well established. And so creating or acquiring challengers to that is difficult, but there may be select markets where there's opportunity, and more than likely that would be in building new routes because, again, as you say, the sort of requirements in those markets are growing exponentially.
And look, I think at the end of the day, given where M&A pricing activity is, as you just said, and what we've experienced in the last 24 months, this exponential rise in multiples has really provided a unique ability for us to pivot and focus more on our greenfield strategies. We think about the first fund that we deployed, what would you say, about 70-30, 75-25 between brownfield and greenfield? Would that be a right distribution for the first fund?
Roughly.
And then this fund currently, are you seeing more sort of greenfield opportunity being deployed in this fund?
Yeah.
And where do you think that mix sits? 60-40 or 65-35?
Probably 60-40.
60-40.
Yeah.
So we've just given you a quick trip around the world between CEO and CIO. This is literally live thinking about what we're doing today at DigitalBridge. I would close in saying, particularly on this topic, Ben, the other thing is sometimes when we're thinking about buying assets in this marketplace today, one of the other levers that we've shown to be pretty adept at is taking companies from a public vehicle into a private vehicle. And those are oftentimes complicated and difficult to maneuver. But I think what makes that unique is we've been able to navigate that. We've been able to form a lot of capital at scale. And most importantly, we've been able to partner with shareholders and management teams to get those companies to the right place, whether it's our experience with Zayo in working with our partners EQT and Fidelity, thinking about Boingo, which is a new transaction, and certainly Landmark, which was a transaction we recently announced. So when we're thinking about big scale opportunities, sometimes some of those best opportunities are bringing a company out of a public format into a private format. Do you see that there's more of those opportunities on a global basis?
Yes, I think so. And as you said, not only changing the form, but also the strategy, and doing it outside of the public eye is a much easier proposition than trying to do that when you're subject to quarterly reporting and analyst expectations.
Yeah, well, you got the chance to hear from Steve Smith earlier today. That's exactly what we've done at Zayo, is we've created massive, change there and business transformation, which if they were a public vehicle, they would have been probably pretty heavily criticized. But we've been able to take that business in the last year, really transform it, transform culture, really simplify the business, and ultimately create value. Well, this has been a lot of fun, Ben. I enjoy always our dialogue and our debates, and I look forward to many more decades working with you and continuing the debate.
Likewise. Thank you.
Thanks. Well, here we are at the end today. I want to thank you for spending time with us and learning more about DigitalBridge and our differentiated approach to investing and operating in digital infrastructure. Just to recap today and some of the things that we'd talked about. First and foremost, the market. A great opportunity sits in front of us, and we want you to join us in that journey. Second thing is strategy. Our differentiated approach to owning, operating, and managing this infrastructure. We hope today that you got a real glimpse into how we do it and the intricacies that are required to build next generation digital infrastructure. And last but not least, management, our people. You got great exposure to some of the best executives around the world today that are been entrusted with this digital infrastructure and managing these great companies. I want to thank all of the people that made this happen today. First and foremost, the participants, my trusted partners, and all of our employees and their dedication through this trying pandemic. I want to thank my board for their support and direction. And most importantly, I want to thank our partners, our customers, and investors for their faith and trust. We're poised to win, so let's go get it. Thank you.